The market is always a friend when you understand these three things that I'm going to teach you today. These two things that changed my life as a forex trader. The moment you understand these two things, your trade, the way you trade is going to change for life. The way you look at the market is going to change. Now, forex market trend is always our friend as a retail trader. And when trading, we have the most important things we follow when trading. Now, looking at your charts, there are three things you as a forex trader you are going to ask yourself whenever you come in front of your charts trying to navigate, trying to analyze the market to see how you are going to take a chunk from the market in that particular day. So there are three things a forex trader is definitely going to be looking on his mind is going to carry on his mind to navigate the trend. Now, when you open your chart, the first thing you want to see on the particular asset, be it GBP USD or Euro USD, any asset, even if it is BTC, even if it is GBP USD gold, any asset of your choice. Now you need to carry these three things on your mind, and number one is where is price going to. Number one is where price traded away from. Now you really need to know where price traded away from. So when you know where price traded away from, you need to know where price is currently. Because price in this market traded away from somewhere, and it is at a current situation. It is at a current state of price action. And the third thing you need to carry in mind as an ICT trader is that you need to know where price is going to. Because when you know where a particular asset is going to, then you can now follow the direction. Then you will now come up with structure marking. You will now come up with following the direction. This is when the forex market is definitely going to be your friend. So when doing these three things, you have no struggle. Instead, you are going to have a clear definition of price action, and you are going to follow the trend as it matters. Now, another most important thing is time frame. As a retail trader, we are going to face on time frame. We are going to navigate on these most important four time frames I disclosed here. Number one, we have to look at the weekly time frame. Then we have to look at the daily time frame. After the weekly time frame, we go down to the daily time frame. After the daily time frame, we go down to the 4 hour time frame where we are going to see the structure, our big boy time frame. Now we go down to the 15-minute time frame where we are going to see our entry. Now the weekly is to see the overall perspective. We are not trading on the weekly, but it is just to see the overall perspective of what I said here, where price traded away from and where price is currently. Now number two, which is the daily time frame, is to buttress what the weekly time frame gave to us. The daily time frame is going to break it down in a way that we are going to understand it. Then the 4 hour time frame is going to give us the structural movement of price, which comes the movement of price in a particular state. And the 4 hour time frame is definitely going to show us if price is going to be our friend or not, of which it is going to be our friend. Now the 15 minutes time frame is the time frame for entry. As a forex trader, you need a time frame for entry, a time frame that is going to give you the opportunity to take trade without hesitation, the opportunity to take trade in a minimum amount to risk low in a particular trade. Now, without wasting much of your time, let's go into the chart and let me give you an example of how these things work. Now, looking at this chart, this is GBP CHF. We want to break this thing down to see how the market is definitely going to be our friend and how we are going to take trade in a way that we are going to understand the direction of the market. Now, on GBP CHF, we are going to go straight to the weekly time frame, which I stated earlier. We are going to go to the weekly time frame. Now, the weekly time frame is just to show us the overall bias and where the movement of price is going to. Now, looking at the GBP CHF, you are going to see that GBP CHF has been massively bearish. Even an old baby, an old child, or a small baby is going to understand that this price is a bearish market because you can see the momentum of the candlestick. You can see how huge the momentum of the candlestick is. The retracement alone is going to tell you that GBP CHF is bearish. Now, looking at this candlestick, you can see how large this candlestick is. Now, the second candlestick, you can see how large with enough momentum that price is going to the downside. And where is price going to? Price is definitely going to somewhere. Now, remember I told you guys, price, number one, we want to know where price traded away from. We want to know where price is currently, and we want to know where price is going to. And from this chart, you can see that price traded away from here. We have a break of structure to the downside. This is a break of structure on the weekly time frame, and price traded into an order block. We have an order block resting at the premium area of price. Zooming into this chart, you are going to see it very, very clearly. You can see that we have a break of structure, price traded into an order block, and this is where price is trading, where price traded away from. Now, where is price currently? Now, price traded away from this order block, and price is trying to target this sell side liquidity. We have a sell side liquidity facing price, and this is where price is trying to go to. But because price have not traded into that sell side liquidity, it is currently on the move to trade into that sell side liquidity. So that this is where price is currently. Price current position is trying to fill up the sell side liquidity that is resting below. So this is what price is trying to do. So understanding this is going to make it very simple for you to get. Now, from this time frame, we are now going to go down to the daily time frame as I stated earlier. Now, the daily time frame is to show us more clearer picture of what the weekly time frame has done. So looking at the daily time frame, we still have those structure here, price breaking structure going up to the upside, and you can see how price cleared liquidity when price traded into that weekly time frame order block. Now I'm trying to correct the price action. You can see that we have an order block around this area, and price swept liquidity. The moment price swept liquidity after trading into that institutional reference point, which is the order block, you can see how price start retracing to the downside. Now, this is where the 4-hour time frame is going to be in tandem. This is where the 4-hour time frame is going to be our big boy time frame. This is where we are going to navigate the structure and take good trade in a perspective of the order flow. Now, the moment price swept liquidity, price started coming down, and the aim of price trying to come down is to target this sell side liquidity. That is it, because the market moved from buy side liquidity to sell side liquidity, internal range liquidity and external range liquidity. Now, on the 4-hour time frame, we want to see the structure. This is where price is definitely going to be our friend when we understand the structure on the 4-hour time frame. Now, looking at the structure on the 4-hour time frame, what are you going to see? You are going to see that we have series of structures to the downside, where we have number one, we have the first break of structure around this area. Price broke structure here. This is our first break of structure to the downside. Now, when price broke structure, we are expected to wait for price to trade into an institutional reference point before we start selling. Now, you can see that price broke structure then left us with a fair value gap. Zooming in from this, please, if you are in a haste, you can go out and later you can come back and watch this video, because it is very important and it is definitely going to change the way you trade and look at the market. Please kindly subscribe to my YouTube channel and turn off the notification button as we continue. So price broke structure to the downside, leaving us with a fair value gap around this area. We have this wide range fair value gap to the downside. The moment price traded into that area, you can see how price displaced to the downside. So for further confirmation, we can go down to the 15 minutes time frame to look for our confirmation to take this trade. Now, going down to the 15 minutes time frame, you are going to see how the trade is going to look like. Price is definitely going to give us a confirmation to trade to the bearish direction. Now, from the 15 minutes time frame, you can zooming into the 15 minutes time frame. Price gave us a confirmation around this area. You can see how price went after tapping into that area. Price shifted structure from here. We have a shift of market structure. This is a retracement. Price shifted structure here, gave us our first shift of market structure. Then the moment price shifted structure, price retraced into the internal range order block, and you can see how this trade displaced immediately to the downside. So this is the first retracement for price, and this is how price reacts from a key level. Now, going down to the 4-hour time frame again, going down to the 4-hour time frame, we are going to see another structure after price broke structure to that area. we are going to see how price gave us another structure. Now on the 4-hour time frame, still moving on, we have a second break of structure around here after the moment price traded into this fair value gap. The moment price traded into this fair value gap with this first break of structure to this area, because this is a break of structure because the body of the candlestick closed below that area. So this is our first break of structure. Now price left us with the second break of structure. This is where the trend becomes your friend. The moment you stop violating the movement of the higher time frame and stick to the higher time frame movement, the market is definitely going to be your friend. Now we have the second break of structure here. Price broke structure to the downside and we're expected to sell from the premium area to the downside. Now what institutional reference point do we have from the premium area? Now looking from this price action, price left us with a fair value gap here. We have a fair value gap around this area. Now you can see the moment price broke structure, price came back into the fair value gap and displaced to the downside. So if we are to take this trade, we are going to take this trade in the direction of price and we follow the trend. Our stop loss above this while we target this low. So this is how the second trade would have been a very good trade if you take this trade. This is how to follow the trend because the trend is always our friend. So let's go down to the second example. Now this is the first example. Now I've given you the second example. Now let's go down to the third example. The third example, after price traded into that key level, we have another break of structure here, which is this area. Price broke, price first of all retraced, came back down, broke structure, gave us the third break of structure here. After giving us the break of structure, price traded into this fair value gap and you can see how that fair value gap was respected. Price traded into the premium area and sold a little bit. Now going down to the 15 minutes time frame, you can still see a confirmation around that area. So we are going to see a market structure shift around that area. So here you can see how price went up, retraced, went up again, retraced, went up and gave us that confirmation we are looking at. We didn't have any confirmation around this area. Price came. Now we have our shift of market structure. Price shifted structure below here, market structure shift, now retracing into our fair value gap. Then we sold. We are expected to sell from here, your stop loss below this low while you target the relative draw on liquidity. So this is how to follow the trend from the higher time frame perspective. Now moving up to the 4-hour time frame again, price later came back again, swept liquidity. Price came back again after dishing out with this profit. Price came back again for the second time. Price came back again for the second time, giving us another entry to the higher time frame perspective. Now this is a break of structure and also we have another fair value gap. Zooming out from this, we have another break of structure around here. The moment price broke structure, this is the general structure. Price came back to our fair value gap again, filling up this fair value gap. The moment price filled up this fair value gap, you can see how price displaced to the downside. So this is how to follow the trend. If we are to zoom in into the lower time frame for confirmation, we are going to have a lot of confirmation in the 15 minutes time frame. So the 15 minutes time frame is going to give us our market structure shift. And from this area, we are going to see that we have our confirmation. You can see how price shifted structure from the 15 minutes time frame. We have multiple shift of market structure. This is to signify the bearish direction. So if you are to take trade from here, you are going to be profitable. The moment price retrace, you sell. Now price came back again, gave us another shift of market structure again from here. So the moment price shifted structure, it started tanking to the downside. If you didn't take it from here, you are going to take it from here. So this is how to trade using the higher time frame to navigate and analyze the trade to take good trades. And doing this in a good and due diligence way, you are going to take a lot of good trades that is going to make you profitable in a particular week or a particular month. So this is how to follow the trend from the higher time frame. And remember guys, the trend is always your friend. When you understand the higher time frame direction, where price traded away from, where price is currently and where it is trying to go, everything is going to change. The way you trade, the way you analyze, the way you look at the market is definitely going to change. So this is still Define FX Capital. If you have understand a lot from this video, kindly subscribe to my YouTube channel, turn on the notification button to get more insightful video that I'm going to be posting during the week. So go into your chart and analyze and look out for these things and practice and get better. Thank you. This is Divine Effects Capital. Peace out, guys.